Welcome to the yield tree. We are standing at the edge of an event horizon of civilization-level wealth reset. Silver spot price is at $94.19. Gold stands at its peak of $4,742. This is not a simple bull market. This is the final scream from an old world that is collapsing. What we're going to discuss is not price fluctuations, but the ultimate reckoning of physical reality against paper lies. If you think $100 is just a number, then you've completely ignored the financial nuclear fusion that is happening. When the last psychological dam of $100 collapses, there will be no more buying opportunities in the market, only price jumps in a vacuum state. $150 won't be the end. It is just the first gas station after silver enters the triple-digit era. This judgment is not based on emotion, but on the complete suffocation of the physical supply side that we've observed. The U.S. Mint is selling proof silver coins at $173 per unit, which is nearly 80% higher than the paper spot price. This is not just a premium, this is an official early endorsement of future currency devaluation. The government knows the true value of the dollar. They're just sending signals to the few who are awake through this pricing. Meanwhile, physical retailer APMEX has set a $500 minimum order threshold, and refineries have started to indefinitely postpone settlement of old silver. All exits are narrowing. The system isn't slowing down, it is locking up. Every paper bill in your hands is rotting faster, while tickets to real assets are being recalled one by one. In this rational safe haven, we need to strip away those false macro narratives and directly examine the underlying architecture that is bleeding. Silver has never in history faced, as it does today, both an explosion in industrial demand and a panic run on monetary purchasing power. We need to look not only at the $94 quote, but more importantly at the unobtainability behind those quotes. When you try to buy physical from a major bullion dealer, you'll find the price is just a suggestion. The real transaction price, the so-called physical premium, has already rendered the spot price meaningless. 90% junk silver, what we commonly call constitutional silver, now has premiums that have reached an outrageous level. A silver dime with a face value of 10 cents now requires $6.7 to exchange for 12 years ago. That number was $1. This means that in just one short cycle, the dollar's function as a measure of value has lost 85% of its original capacity. This is a boiling frog slaughter. Most people are still fixated on the decimal points of CPI, yet haven't noticed their savings are being slowly evaporated by a physical law. Let's dive deep into that event horizon, about $100. In mathematical trading models, $100 is a critical point. Above this level, all short positions globally will face irresistible, forced liquidation. The ratio of paper-silver contracts to physical inventory on COMEX has reached an unprecedented level of absurdity. This means that behind every 1 ounce of physical silver, there are hundreds of ounces of false promises attached. Once the price breaks through $100, all shorts must go find real metal to deliver, but the physical world will tell them there is none. This forced return from paper to physical will cause an unprecedented run. This run doesn't happen at bank branches, but at the doors of refineries, mines, and vaults. Harry mentioned in the original text that $150 will happen within weeks, which is an extremely rational prediction, because in such a vacuum state, prices are no longer determined by buy-sell games but by default costs. If a short cannot deliver silver, they face bankruptcy, so they will grab any ounce of physical they can find in the market at any cost. At that time, silver will transform from a commodity into an exit permit. Another deadly signal we observed is the behavior of refineries. When refineries start refusing to recycle 90% old silver and sterling silver. What does this mean? This is not just a technical issue. This represents the saturation of processing capacity at the center of a financial storm. No one wants to spend time processing complex alloys. Everyone wants the purest 1 ounce bars or rounds. Refineries extending settlement periods to 1 to 3 months is effectively announcing the liquidity of physical assets has developed a blood clot. If what you are holding is physical material that requires reprocessing, then you may not be able to liquidate at all when the storm hits. This is exactly one of the characteristics of systemic collapse, the internal hierarchy differentiation of assets. Only the most standard, highest purity metals possess the ability to circulate instantly during extreme crisis. This phenomenon has appeared multiple times in history, and it usually heralds the end of a monetary system. No, look at the US Mint's pricing behavior. $173 for a proof silver coin. This is absolutely not just market behavior. The Mint is an extension of the Treasury Department, and their pricing reflects some kind of higher level will, by pushing official product prices up to around twice the spot price. They're actually conducting a kind of soft revaluation of the domestic currency. They're telling those who can read the data, if you want officially certified wealth, you've got to accept this price. This is a prophecy and also a form of protection. Through this exorbitant cost, they're keeping the masses locked out of physical wealth while leaving hedging room for the elite class. If you are still hung up on $3 or $5 of physical premium, you probably haven't realized at all that the premium itself is the real price discovery, while the fluctuating numbers on the screen are just a smokescreen to cover up the truth. The current geopolitical situation is like sparks falling onto a pile of dry hay. A carrier strike group is heading toward the Iranian coast. The flames of war in Ukraine have already burned through Western arsenal reserves. And the Greenland dispute is opening the curtain on the Arctic resource war. Why will this news have a direct impact on silver prices? Because at the core of every precision-guided missile, every electronic warfare system, every solar panel array, there is silver, a material whose physical properties are irreplaceable. Silver is the metal with the highest electrical conductivity. It is the nerve endings of modern industrial civilization. When war breaks out, governments' stockpiling of this strategic resource will shift from undercurrents to open flows. They won't buy contracts on COMEX. They'll directly block mineral exports and directly requisition physical metal from the public. Under these circumstances, silver's monetary properties will undergo a violent chemical reaction with its industrial properties. It is both an ark for safe haven and a sword for slaying enemies. If conflict erupts in Iranian waters, the surge in global energy prices will trigger secondary inflation in production costs, and silver will become the only tool to hedge against fiat currency collapse caused by energy scarcity. Let us turn our perspective to the wealth migration that is currently happening. The 10% precious metals tax implemented by Washington state is a typical microsample revealing the predatory nature of governments in desperate times. When an administrative entity begins taxing real money, it is actually admitting that the banknotes it issues have lost their appeal. By setting up such high entry barriers, they are trying to prevent capital from flowing into physical assets that can protect purchasing power. However, this approach will only accelerate the death of the system. As we've seen, people are willing to drive 4 hours across state lines to buy tax-free rounds. This behavior is a manifestation of survival instinct. A state, a country, if it tries to retain capital through taxation, it will only end up with a depleted, empty shell. Those people driving across states, they're not just avoiding taxes. They're engaging in a form of wealth decoupling. They are stripping their life's labor achievements from digital accounts that can be frozen at any time, eroded by taxes, and converting them into a physical entity that doesn't depend on any regime's credit. This exodus of wealth is global. From the Eastern superpower's central bank accumulating physical reserves for years to retail investors in Europe and America scrambling for physical bars, this forms a closed loop. Everyone realizes that the fiat currency experiment that began in 1971 is entering its endgame. Gold's performance above $4,700 has already told us that the credibility of credit currency has been overdrawn. And silver, as the poor man's gold, its volatility and potential explosive power is what truly terrifies the system. If silver returned to its historical gold-silver ratio, say 15:1, then with gold at $4,700, silver's price should be $313. The current $94 is merely a severely distorted price starting point. This distortion cannot last forever. Physical laws will ultimately triumph over the leverage of financial derivatives. Many people ask, why is it only happening now? The answer is, systemic collapse never happens in an instant, but starts from the tiniest cracks until it reaches the tipping point. The current minimum order limits, refinery settlement delays, high official pricing, and cross-state tax evasion, those are the cracks. When all the cracks connect, the dam will crumble in an instant. At that point, $100 will be left behind in minutes, just like every historical milestone before it. If you don't have physical in your hands yet, what you'll face won't be higher prices, but no supply available. The $10,000 transaction limit that Harry mentioned in the original text is also a key data point. Beyond this number, you'll have to face IRS surveillance and complex compliance reviews. This means the government has already preset a ceiling for wealth escape. They allow you to take a small bag of silver coins, but they won't let you leave this sinking fiat system with your entire family's assets. We live in an era where data is extremely transparent, but truth is extremely scarce. You can instantly check the silver price on your phone, but you can't buy that ounce of metal. You are told the economy is recovering, but the cash in your hands can't buy the same amount of goods as a year ago. This disconnect between felt experience and data is a classic symptom of credit collapse. When this disconnect reaches its limit, silver will demonstrate its power as the ultimate settlement tool. It doesn't rely on anyone's promises, doesn't rely on any power grid's operation, doesn't rely on any government's credit. It is there. It is value itself. This pure physical value is the only reassurance in a turbulent century. In the coming weeks or months, we will witness this Griffin moment. That is when the mythical beast awakens, guarding the physical wealth it has accumulated over half a century. The surge in gold and silver is just this beast rolling over once. The real storm will arrive on the day when paper contracts completely rupture on that day. You'll thank yourself for today's rationality. Thank yourself for making that decision that went against the market common sense of the time on that long state highway or in front of that remote coin shop counter. We must understand, this is no longer a game about making money. This is a war about preservation. In the digital illusion, your assets are just a few bytes on a server. They can be deleted, diluted by inflation, or stripped away by law. But physical silver, it is a language that transcends time and space. No matter how the future power landscape shifts, no matter how geopolitics evolve, silver's atomic structure will never change. It is the last value anchor that the universe has bestowed upon humanity. When the $100 barrier is breached, when prices of $150 or even $200 become background noise on the evening news, the world will understand this is not just a victory for silver. This is a belated but thorough reckoning of physical reality against the nihilistic financial system. Let's take another look at that $6.7 silver dime. It is reminding us that changes at the micro level often lead macro prices. While the masses are still staring at the spot market, smart money has already completed their positioning in these fragmented, hidden corners. Every silver coin privately collected is a brick pulled from this debt-ridden system. When enough bricks are pulled out, the collapse of the entire edifice becomes a physical inevitability. The current $94.19 is the last barrier of this system. And on the other side of that barrier lies an era of physical revaluation that we have never experienced and cannot imagine. Please stay calm. In this crazy market, rationality is your only bulletproof vest. Don't chase those illusory leverages. Seek out those tangible realities you can hold in your hands that have weight. When the $100 mark is breached in an instant, In some late night or early morning, you will understand that the roots of this wealth tree have never been in those flickering numbers, but in those silent metal atoms. This systemic lockdown is already happening. When the largest retailers refuse small orders, when refineries demand settlement periods lasting months. This is a disguised announcement. Physical assets are no longer open to paper currency. This is a soft closed for business. If you are still waiting outside for a more perfect entry point, you may have already lost the chance to push open that door forever. This world is splitting into two tiers. One tier continues to struggle in the illusion of the paper game, watching their purchasing power drain away, like an hourglass. The other tier has completed the physical conversion ahead of time, quietly waiting for the storm to blow over. I hope you are the latter. I also believe you are the latter. Because if you can understand the underlying logic that the yield tree is whispering, if you can see through the true intentions behind those tedious data, then you already possess the qualities to survive this wealth migration. What we're fighting against is not the market, but humanity's blind dependence on the old order. The era based on credit and debt expansion is coming to an end, while the era based on physics and scarcity is awakening at dawn silver. As the vanguard of this transformation, every beat of it is tearing apart the mask of the old world. $100 is not just a number. It is the last dignity. When this dignity no longer exists, we will usher in a brand new, even somewhat cruel pricing standard. At that time, silver will no longer be priced in dollars, because it itself will be the unit of pricing. At that time, you will be grateful that at $94 or even at $100, you made that most rational choice. The fuse of geopolitics is already sizzling. The movement of carrier strike groups is not just military deterrence. It is the game between great powers over the last bastion of resources and currency. Under such a grand narrative, if personal wealth cannot be converted into some form with sovereign independence, then it can only become fuel for the game between great powers. Silver, this metal both cursed and favored by history, has once again become the anchor that calms the storm at its center. If you still have doubts about the $150 prediction, please go take a look at those depleting mines, take a look at those export channels being shut down. The mining cost and environmental premium of physical silver are growing exponentially. This means that even setting aside the factor of currency devaluation, the physical value of silver itself is being reassessed. When industrial giants realize they cannot obtain enough silver in the market to maintain production, they will pay any price to secure the supply chain. At that time, silver will no longer be a plaything for retail investors, but a strategic asset for large institutions and sovereign nations. This game has no rehearsal. Every piece of news you see, every bit of data you receive, is the dying gasp of this massive machine before its end. Don't be fooled by the surface appearance of numbers. Look at the physical flow behind the numbers. When you see crowds buying across state lines, when you see delay notices from refineries, you've already seen the shadow of the future. This shadow is growing larger until it covers the entire sky of fiat currency. This is why we're here discussing all of this today. This isn't about speculation. This is about rational survival. Remember, real opportunities never belong to the majority. They only belong to those few who seek truth in the shadows and dare to act in the face of truth. We're standing in the crack between eras. In this crack, all common sense is being overturned. All lies are being exposed. And silver, it is lying quietly in that crack, waiting for every awakened person to pick it up. Don't be scared off by the $94 figure, because in the eyes of people in the future, it will be such an enviable low point. Please stay vigilant. Please stay rational. Please hold on to your physical assets. In this upcoming, irreversible market upheaval, your only reliance is your deep understanding of the essence of value. This tree of returns has already taken root in reality, and you will grow along with it, crossing that threshold into the future. If you can sense the shock that is about to come, then you are already prepared to face the challenge.